So righto, Adam, with this debtor in possession model, the potential sting in the tail that people are talking about, the COVID versus not COVID safe harbour, what should accountants be talking to their clients about right now?
It's tricky because the skill set of accountants varies so much between different firms and different people. It's very, very tricky to say what they should and shouldn't be doing in terms of giving advice. A lot of accounting firms, unfortunately, are reluctantly to hand out what they see as handing out their client to another advisor, who, even though that advisor might specialise in this particular area. The one message that I would give to accountants at the moment is don't be afraid of farming out this type of specialist advice to people like Stuart and I, because we have no vested interest in the outcome and we have no desire to take their clients away. We don't do the compliance work that they do or the tax work that they do, and we have no interest in doing that ever. So that's my advice. Don't be afraid to farm it out.
Okay. Want to have a crack at that one, Stuart?
Well, I'll just add to the side of what Adam says is that if the tax accountant can look at what the working capital ability is of their client, have a look at what their monthly commitments are. But perhaps one of the other critical bits, Adam, is that their relationship with their suppliers is going to be critical to whether a debtor in possession model might be successful, because if they have poor relationships, it's not going to get very far. If they have very good relationships and they've been genuine and they talk and they communicate, then that might be one of the key factors in whether the director is able to get through the process, restructure themselves, compromise some debt and have a longer term future. And that maybe is the thing for the tax accountant, because if the tax accountant's going to be critical to the debtor in possession model anyway, then they're going to be a fair bit of work there doing, getting the financial statements up to date, helping with cash flows, helping with the working capital requirements with their financiers, whatever it might be. It still goes back to the suppliers. They've got to sign off on it. They've got to agree. Now, there might be a whole bunch of suppliers out there that just assume that there's going to be some compromise of debts they have to do. There's going to be some bad debts in their business that they're going to have to look to the future and say, okay, well, I'm going to get $10 out of my $20 that Harry owes. Okay, I'd rather look to the future because Harry's been a good bloke in the last 5 years that I've dealt with him.
So the truth lies somewhere in the middle. So it's a case of Adam's view, I think, of the world is don't try and do everything yourself if you're the accountant. Do look to expertise, but I think your point's also a really strong one too, Stuart, which is there's 4 or 5 key questions you need to ask yourself, and I think then finding out the answer, then knowing who to talk to about what you do with that information, taking that client forward. Yeah.